Here to introduce themselves, our session speakers are Diane Yetter and Ray Bigley.
Hi, Gail.
Hi.
Thanks for having me. I'm Diane Yetter. I am the president of Yetter. We are a sales tax consulting firm, and the Sales Tax Institute. We provide sales tax training.
Okay, and you're based in Chicago?
Based in Chicago.
Chicagoland, okay.
Hi, Gail. Hi, Diane. I'm Ray Bigley, Vice President at Avalara. And what could be more exciting than to talk about sales tax during the holidays, huh?
Exactly.
Exactly.
Absolutely right. During this session, we have a few polls for you that we'd love to have you participate in. So just to get you there, you need to log in. Let's use your phone so you can stay on the screen for the session. Use your phone and go to the website slido.com, SLIDO.com. And if it asks you for a session number, the number is ES, as in Ensuring Success, 2017, ES 2017, and that'll get you in to see our polls. You can also post questions for us there as well, and we would love to have your questions for our speakers, so feel free to participate in the session in that way. So we're going to start off this session talking about Nexus, and I think many of our taxpayers, or many of our listeners probably know what Nexus is, but some may not. So let's have just a really quick description of what Nexus is and then what you think we're going to see in the way of Nexus legislation in the year ahead.
Okay, well, sales tax nexus, when we talk about that, what it really is what is the level of presence that a company needs to have within a jurisdiction before a state can require them to have to comply with their taxes. And historically, we've looked at it under a substantial physical presence test, which means where were you physically? And that is not just on a permanent basis, like where you might have an office, a showroom, a store, but also where you might have employees that live. So today, in today's world, where so many companies operate in a virtual world, where do people live? But it's also where they traveled. And so going to trade shows, going to conferences, if you're an exhibitor, that historically has always created nexus. But what we're seeing, and what I think we're going to continue to see, are the states trying to expand that definition and broaden their interpretation of what is substantial physical presence. And so we've seen click-through nexus, which is where you pay commissions to people to make referrals to you. We've got that in about 22 states. We've got what we refer to as affiliate nexus, started out with common ownership. So if you have more than one legal entity, if you operate in a shared type of environment, that about 25 states have provisions related to that. But the newer things that we're seeing, and this is where I think we're going to see things change. Marketplace nexus, big splash in the news. The state of Washington is implementing that effective January 1. Amazon has agreed now to collect tax on behalf of all of their third-party sellers that aren't already registered in the state of Washington. We've got, I think it's about 8 or 10 states that have those types of provisions that either are in place or going to come into effect early next year. And I think that's where we're going to see a lot of those changes. Economic nexus, we're waiting for the Supreme Court to hear South Dakota's case, and I think that's the other thing that we're going to see happening.
And Diane, how does sales tax nexus relate to income tax nexus? You hear about this, and are they related or not? Or
there's some similarities between that. Sales tax nexus has a much lower threshold than income tax nexus, so a company can have people doing sales solicitation in a state, and that doesn't create income tax nexus. But it can create sales tax nexus. But we do have more states that have an economic nexus threshold, and that has been found to be constitutional in the state of Ohio. So there you do have a few different broader types of interpretations.
Okay, got it, thanks.
This marketplace nexus that they're instituting in Washington, do you see that spreading into other states? Is there a movement to have that happen?
I do think that's going to happen. South Carolina, without any sort of marketplace nexus, has actually sued Amazon for, I've lost track of the dollars, Ray. I don't know if you remember what the latest number is, but it's in the tens of millions of dollars, if not higher now, for not collecting tax on the third-party sellers. So Amazon now collects tax in all states that have a sales tax, and they've been doing that for almost all of 2017. I think they picked up their last few states earlier this year. But it's the third-party sellers that aren't collecting tax.
Yeah, and I think we all know what we're talking about here. It's the online sales that is driving this behavior. And there was an article just earlier this week that UPS and FedEx, they're all going to be backed up because the online sales are greater than they've ever been. And so I think that you'll see a continuation of the states trying to find ways to collect those revenues that they feel as if they're losing out on. And that's what really is driving all this behavior.
It is. And, you know, there's been proposed federal legislation for as long as I've been doing sales tax, and nothing has passed. You know, do we think something is going to pass? I don't know. The federal Congress is a little busy these days. But at the same time, Representative Goodlatte, who has been chair of the Judiciary Committee, announced he is not going to run again in the midterm elections. So I don't know if changing the chairmanship of that committee might actually allow something to proceed, because he's been very much against letting anything happen.
Okay, well, we've been running our first poll question, and the question was, one of the biggest challenges is knowing when you have nexus. And the question is, who should set the rules for this? And some answers are still coming in, but the options were let the states make their own rules, define nexus federally, or make sales tax a federal tax. And the overwhelming response seems to be define nexus federally. So I think people seem to want some continuity instead of every state making their own rules, which is chaos, but I guess it keeps you guys in business.
Yeah. Well, yeah, obviously Avalera, and you know, Justice Kennedy, and I think it was 2015, stated in a ruling that Quill is outdated and should be updated, and the states are losing out, and due to the way in which people are buying today, the older methods, you know, shouldn't apply. But you know, obviously we haven't gotten there on a federal level, and the states, what we've been talking about are ways that the states are stepping in to, you know, close that gap, so to speak.
And that's what the South Dakota case is. So they instituted an economic nexus, so no presence whatsoever is required. All of those other provisions that I mentioned have some sort of presence in the state, but economic, you just exceed a certain number of transactions or a certain dollar threshold, and then you're required to collect the tax. And that currently does violate the Constitution and the Quill case as it stands. And South Dakota set up their legislation in a way that allowed them to fast track it through. So the South Dakota Supreme Court found it unconstitutional. The state appealed it, and so we're waiting to hear if the Supreme Court will actually hear the case. So we haven't gotten that decision yet, but we're hoping it will take the case, and we will get some sort of insight.
Okay, and do you want to just talk real briefly about what the Quill case is for those who might not be sales tax experts?
So the Quill case was a North Dakota Supreme Court case decided in 1992 that defined what is required before a state can require a company to collect its tax. So that's where we look for the definition of nexus. And so what the Quill case came down and said is, before a state can require a company to collect its tax, it must have substantial physical presence in the state. However, the second prong that a lot of people forget about is that it also said under the Due Process Clause, it only requires a minimal connection. And that allows states to require companies to provide information about their customers so that the states can go after the customers. And that's the last trend that we're seeing really kind of pop up. Ray mentioned the Colorado case that went through the U.S. Supreme Court. The Direct Marketing Association case, the DMA case, and that was found to be constitutional. And so now we are up to, let me double check my notes, 11 states that have passed what we call notice and reporting requirements. And these are crazy and onerous, but they only apply to companies that are not registered, that they have to send in information about their customers. They have to put information on every invoice that they issue, and they have to do reporting to the states and to the customers. I refer to it as sales tax 1099s because it's that same time cycle that you have to send information out. And that, I think, we're going to see more states pass that next year also.
And this is directionally the same, but wasn't there a state, I believe Colorado, didn't they try to collect use tax from buyers who who hadn't paid sales tax in their state? Do they assess?
All the states do that. And what we've seen over the years, a trend towards actually having it being added as a line on the individual income tax return as a way to increase compliance with that. But all the states have that. There's been different efforts. Many of the states have agreements with the Customs Department that they actually get reporting. So if you travel abroad and you come back and you report, and you can be under the customs threshold, but you report that you brought anything back in, and they are, you may get a notice from your state that you owe the use tax.
Yeah, and I think the difference is every state that has sales tax has associated use tax.
Correct.
But states are trying to enforce it now, again, as a way to close this gap. And if you're a politician in a state, you don't want to tax your own people, and that's what if you enforce the use tax laws on individuals, on consumers, not businesses.
Right.
You're effectively doing that, but states are going further than we've ever seen before to make that happen.
Right.
So we're going to talk just a little bit more about use tax in a minute, but first we have a break where we're going to learn about our sponsors a little bit more, and also when you come back, you'll get your first CPE code for this session. So we'll be back in about a minute.
Your firm is only as strong as your team. Sales and use tax is an expertise that many firms lack simply because sales and use tax is not something taught in schools. But it is critical for the modern accounting firm to offer their clients. The Sales Tax Institute has been training CPAs and accounting firms in sales and use tax issues for over 20 years. We focus on the issues that are important to your clients in our fun and interactive classes.
My name is Andrew Zablocki. I work for R&M Consulting. I do see this class helping me because it's given me more resources of where to look for to be able to help expand what I'm able to do, which helps my company, which will help me grow and help my company grow and be able to bring in more clients and some larger clients going through.
With the unparalleled sales and use tax training from the Sales Tax Institute, you can service your clients while helping your team grow into specialists. Visit us online for a unique Ensuring Success offer to try one of the Sales Tax Institute's training courses today.
Welcome back. Your CPE code, the first one for this session, should be appearing on the bottom of your screen right now, so be sure to write down that 3-digit number and save that. If you require CPE or CE credit for this session, you'll save that and combine it with the next 2 codes that you get later on. So just before the break, we were talking about use tax, and I find it almost amusing that use tax is such an overlooked tax and that states have such difficulty enforcing it. If you look at most individual state tax returns, it's right there, and yet people just skip over that line, including, I think, maybe their accountants. So why is it so hard for states to collect use tax?
Well, I think states have put in place different methods from businesses, and certainly businesses are more likely to be audited. I actually have a couple of clients, and they, small businesses, relied on their local, CPA to be the person that helped them, in some cases, actually file their sales and use tax returns. And they got called for audit, one from the state of Illinois, one from the state of Wisconsin. And on the sales side, they were clean or virtually clean, a couple missing exemption certificates for one. They ended up with 5-figure assessments on use tax. And why? They hadn't reported a single thing. With one of them that used their accountant to do the work, I asked the accountant, why aren't you reporting any use tax? Oh, they buy everything locally. I said,
Nobody does that
think
anymore.
so. I don't think so. But you know what caught them the worst? Is it was the business owner who was buying product and didn't keep the receipts. So they certainly needed Receipt Bank to capture those receipts, because all they had was the charge slip, not the detailed invoice that would have showed any tax. And it went through on our expense report. We had no way to prove. We tried everything we could, and that became a huge part of the assessment, was just missing documentation. From individuals, today on your federal return, if you're in a non-sales tax state, you can take that sales tax deduction. The states have schedules that you can actually use similar to that table in the IRS. And the other thing that you need to watch for is most of those states say you must enter a number. If you don't enter a number, it's considered an unfiled, or the state will go in and using their tables will actually assess you an amount.
Interesting.
So, hint, fill a 0 in if you don't want to report anything.
Yeah, and I think, Gail, just thinking back to this is really near term from from a tax point of view. Individuals historically would go and buy things at their local stores or go to a brick and mortar store and buy something, and sales tax was charged. And so it was only on remote sales, catalog sales, that kind of stuff. And even there, 99% of those times sales tax was charged.
Right.
Where wasn't there a Sears in the United States or a Penny's or whatever.
Yeah.
And so it really is a fairly recent event that an individual would even be aware that they are supposed to self-assess. And culturally, it's just not in our habit. It's not as if when people go in to buy something, they don't argue about, I don't want to pay the sales tax. They just don't realize that they have to do it. An individual, not a business, an individual. And so that's why. And as online sales become even more of the shopping experience, the states are doing what they can to educate people and close the gap, but it's not happening fast enough.
All right, we have a question that came in for Ray. It says, what technology trends are key for the future of the accounting profession? That's kind of broad-based, but maybe we can
obviously that's somebody from Avalara that asked that question. Yeah, and it is broad-based. I think that, and we'll touch on this as we go further. There's a drive for technology to always make things easier and improve the process. And I think that you definitely see that in sales tax, whether you shop online or you have a shopping cart or you do billing, you have ways of collecting sales tax. And I think that where that'll carry through and where it'll make it easier is not only on the calculation side, but the return side. I think over time you'll see easier ways if you sell online through Amazon or Shopify Plus or BigCommerce or whatever it may be, that there'll be tie-ins to get the associated sales tax return done easier than has been in the past. And we see that drive in Europe where it's mandated. But I think technology in the United States will take care of that here.
Yeah, I think you're right. So we want to switch gears just a little bit and ask about exemptions, sales tax exemptions. How can accountants best help their clients make sure they qualify for all the exemptions that should apply to their business?
Well, one of the things that's so important to remember is exemptions are construed very narrowly. And so when a company thinks that they qualify for an exemption, they need to make sure that they meet all the criteria. So some states have provisions you might have to meet 2 or 3 different types of how is something used, how is something delivered could make a difference. But one of the things that we think accountants can really help their clients with is it often comes down to the terminology. And sales tax is very much a form tax over substance. And so if you use the wrong words as your product name, in your contracts, in your invoicing, in your marketing, you could actually lose the ability to claim an exemption because of that. And let me give you a great example. We're talking a lot about technology, okay? And I had a client who sold, and this is many years ago, before having a cloud-based application or an app on your phone was commonplace. And they used a software license agreement as their agreement that they had all their customers sign. And it talked about delivery of a piece of software. But what it was what we today think of as an app. It was something that you logged into on your phone, and it was a way for you to do some continuing education. It had a research library that you looked information up, but it was an information service. But they used a software license agreement. The state of Washington found them, audited them, and assessed them under the fact that they were licensing computer software. all because they used the wrong documents. So I think that's where it's really important for accountants that are working day to day with their clients and understand the client's business and what they sell and what they do to make sure that those sorts of things are right. Make sure your marketing materials uses the right terminology.
Right. Well, I have a client, a photography client, a photographer who is in a state where photography services are not taxable, but photographs are. And if he just put photography on his invoice, you know, how would anybody know? So he has to break it out.
Right, and it can completely change. And that's where working with a company like Avalara is very helpful, because they have a lot of those different categories and can help you recognize and think some of those things through. Shipping versus shipping and handling is another big one that a lot of people get caught up on.
Yeah, and you know, from a technology point of view, this is one area where technology is really helping. You know, when you go into the store now, you can buy, you know, from a remote phone, you can pay your bill and all that kind of stuff. Well, you can do the same thing with exemption certificates or exempt sales. So oftentimes what happened is an employee would go out for their company, they would say that this is an exempt sale, it wouldn't be accepted or not accepted. And now the seller can scan that document and immediately process those transactions. So again, I mean, it speeds up the handling of exemption certificates, and it promotes people who have them to use them differently than they have in the past.
And to use them correctly. So there's two types of exemptions that we just talked about. So product types of exemptions is where the terminology, and what Ray's talking about is customer-based exemptions, where you have to make sure you have the document.
Right.
So if you're selling to a church or a school or to a manufacturer that's buying a piece of manufacturing equipment, you have to have that right documentation to go along with it.
You can't just say, I sold to a nonprofit.
Exactly. You've got to have the right pieces of paper. Even things like you need to make sure that the sold to is the exempt organization and not Jane Smith, who came in and made the purchase.
Good point. Yeah, very good point. So calculating tax isn't easy, especially when you look at all the options and jurisdictions for sales tax. How should companies evaluate when they need to start collecting tax? I mean, the whole process has to be really confusing for someone who hasn't even started it yet.
So the first thing is to look at the nexus rules. We often help companies go through what we call a nexus study, where we gather information about all the different types of activities that a company may be performing in different states. And then we look at those different rules, the physical presence I talked about, but also the newer types of rules, and try to figure out where they should be collecting tax. Then we look at those notice and reporting rules that I talked about where may apply where they're not collecting tax, and help make the decision, is it easier to comply with collecting tax or easier to comply with the notice and reporting? And that's a big decision. That's something new that we have to add in. But then you really have to look at, you know, the risk. So this is an area that I think accountants can really bring value to their clients. Sales tax, the average rate, depending upon which provider you talk to, is somewhere about 9%.
Yeah.
Sales tax is 9% of your gross sales. It doesn't matter if you're profitable or not. If you don't collect sales tax correctly when you should have, does your client have 9% cushion in their margin? And I would venture to guess the answer is usually no. And so if you don't collect the tax correctly, you just lost 9% of profit. And that's where accountants need to help make that evaluation as to what should be done.
You know, you're absolutely right, because again, as I talked about earlier, the buyer is willing to pay the sales tax typically.
Right.
I mean, it's not even questioned. And so you're missing an opportunity to get it collected at that time. Now, there's a lot of consequences down the line, and we know that.
Right.
The other thing, and Diane will correct me on this, but you know, people think of sales tax in terms of rates. You know, we talk in terms of rates, but the complexity really lies in the products that you're selling. And so it's really important to talk to somebody that can put those two together. And you know, a nexus study and a product taxability study really go hand in hand. You know, comparing the products you have across the states tax the same products differently.
Yeah.
And you know that better than I do. And you know, we could talk a lot about streamlined sales tax and what they did to make those goods and services codes simpler. But you know, you could probably off the top of your head give lots of examples where the software that Avalara has, you know, cloud-based software is taxed in some states and not in others.
Right.
That kind of thing.
Yeah, and Avalara was really a driving force and a leading force in helping to make technology change. I've been doing tax technology my entire career, which is more than 30 years. And back then it was just rates. You got a rate table and you custom built your tax calculation engine within your mainframe billing system. And today the world is much different, and there's many more products and options that are available for companies of all sizes. And with some companies, just having rates may work. That's really more of a commodity. But for so many companies, what you really need is something a little bit more comprehensive that gives you not just rates, but sourcing rules and taxability rules and the ability to actually do the compliance.
So how many sales tax jurisdictions are there in the country now?
It depends on the vendor.
Yeah.
How many does Avalara say?
We say 11,000.
11,000.
Yeah,
okay.
and that's in North America.
Okay.
Yeah.
Okay.
So Canada has 7, I think.
Yeah,
Anyway,
that's right.
something
Yeah.
like
So,
that.
so some of the vendors say 9. I think the highest I've seen is 15,000. So
Okay.
9,000 to 15,000.
A lot.
A
Okay.
lot.
And that, of
Yeah.
course, includes state and local, city, county.
Sure.
Correct.
Yeah.
So, okay, we're going to take another quick break right now and learn a little bit more about our sponsors, and we'll be back after the break with your next CPE code.
Hello everyone, I'm Jeremy Korst. I'm the CMO here at Avalara. I'm here today to talk about Crush 2018, which is going to happen next May in Washington, D.C. Crush is the largest event of its kind, bringing together accountants and finance professionals, technology experts, and industry analysts, all wanting to talk tax. Next year's theme, the future of tax compliance. And where better to have that conversation than in DC? Crush is about learning. It's about over 100 creditworthy CPE courses. It's about networking with industry professionals and industry peers. It's about, of course, having some good old Avalara fun. So if you've joined us in Austin or New Orleans in the past, you know the team puts on an amazing show from start to finish. Again, if you're an accountant, finance professional, technology expert, or just anyone who wants to learn tax, businesses of all sizes, you really need to join us next May in DC. Check out AvalaraCrush.com, where you'll find if you have early bird registration by the end of this year, we'll knock off $400, so that's $599 for early registrants. I really hope you check out AvalaraCrush.com, and I hope to see you next May in Washington, D.C.
Hi, and welcome back. So you should see another CPE code on the bottom of your screen. Be sure to write this down and save it for credit for both CPE and CE. This session qualifies for both. We're here with Diane Yetter and Ray Bigley talking about sales tax and all the complications and headaches that it causes. And Diane wants to tell us about the omni-channel. So, and if you go to our poll, we have a poll up as well on the omni-channel. So it's the poll is at slido.com, SLIDO.com, and the code to get into it is ES 2017. So, Diane.
So one of the things that people have to keep in mind, sellers and accountants that advise their clients, is when you have Nexus, you have Nexus for all activities. So what we're dealing with right now is a lot of companies that have gone through the MTC Online Seller Amnesty program that happened from August until early November. And they were deemed to have Nexus because of inventory in an Amazon warehouse. But if they make sales through different channels, so maybe through eBay or Etsy or even direct on a website, their own website, because of that inventory in the Amazon warehouse, that created Nexus for everything that they sell. And that's where a tool like Avalara can be very helpful to be able to plug in to those different platforms that you're selling on, because you need to be able to do that tax consistently.
Yeah, and you know, there's acronyms for everything in technology and tax. And this omni-channel, what it effectively really means is you're selling in different ways. You're selling through an online market, you're selling through your own website, you're billing people through your own billing systems, and you're collecting tax in several different ways. And I think that the complexity lies in the small seller where you're not sophisticated, you're selling through Amazon. Amazon is storing your inventory, and now you have, quote, Nexus. And so that means all the sales into that state. And this term remote seller is not just online selling. You could be selling over the phone or something like that.
Or a ship. Somebody
Yeah.
comes into your store and you have a physical store and they ask to ship goods. Well, if
Right.
you are also selling on a third-party marketplace like Amazon and you have inventory elsewhere, well, now if you ship into a state where you have that inventory, that ship sale, that send sale from your store, you have to worry about handling the tax correctly.
Okay.
Yeah. So in these environments, what internet selling has brought, and we'll talk about international in a bit, but it's brought the complexities that larger companies are used to dealing with to small business. You know, and there's tremendous benefits. We obviously are aware of that. You can start a company and you can start selling immediately in today's world. But the things that you need to be aware of, or things that larger companies have had to be aware of before. And this is one of those. You know, this idea that if you're selling in one way, it could mean you have tax consequences in another.
Okay, and we're getting some poll results here, and it looks like the question, do your clients sell omni-channel across different platforms, and do they understand what the implications are? More than 50% are saying, I have no idea where and how my clients are selling.
Yeah.
So that's pretty interesting.
And I think that's something that accountants, you're dealing with particularly if you're doing the bookkeeping for your clients, you need to know, are you actually, forget about the sales tax, but are you capturing 100% of the revenue, you know, for income tax filing or financial reporting? And without knowing how they are selling, you don't know that you've actually got all of the sources that you need to capture.
Yeah, and I think that, you know, it should just be a common question anymore. When you ask somebody and you say, are you selling online? And they say yes. You say, well, does that mean just Amazon or just Shopify or Shopify Plus? Or, you know, ask a specific question. And then ask, are people buying from your own website? Because we all get these things, you know, interchanged and confused. And specificity or being specific, you know, is important here.
And you can't just ask the question once. In today's marketplace, people make changes like that. You know, a new opportunity will come that they think that, oh, this is a great new revenue opportunity, without thinking through all of those consequences. So, you know, I think the latest you can wait is once a year when you do your year-end questionnaire, but really you should be touching base 2 or 3 times a year, asking what are you doing new? You know, even have you hired a new employee? If, you know, the accountant isn't doing your payroll and so they don't know where you might have set up a new employee, those are those types of questions that you want to make sure you ask.
So is there a checklist or something people can use when they're approaching a client? It may be a new client or a client who they just haven't addressed this with in the past.
Yeah, I mean, I think that this is an area that we're trying to address as a market leader in the sales tax area, is educating accountants and educating the marketplace in general on, you know, how to look at it. Because, you know, I've mentioned several times that states are becoming, you know, more aware. And so that means that the accountants themselves need to become more aware when they talk to their clients and educate their clients. And it's an area that is really just, you know, grown in prominence in the last 5 or 6 years. And so there are, and you can get those online. You can see what you need to be aware of and get. But it's more of an education issue. The AICPA doesn't do training on sales tax. At least they haven't historically, and that may change as well. We'll see.
Yeah, and this is something that my firm, we do a lot of. So we help a lot of companies go through a Nexus study. We have a white paper on Nexus that's available on our website, and we'll be sending out some information about that after the conference with what Gail will be sending out to everybody. But it's important to be aware of it, and I think that's the biggest thing for accountants to remember is You know, if you listened to the very first session this morning about ethics and talking about kind of the unaware and what don't you know, and is that unethical or is it illegal? And I think accountants that don't talk to their clients about sales tax, it's not illegal. Is it unethical? I almost think it might be, because, you know, if you're not bringing up that question, you're putting your client at risk.
And you know they sell something.
And you know they sell something, even if they sell a service, because there's a lot of states that tax services.
It's such a different environment than it used to be. I mean, the ability for somebody to sell worldwide is so easy. And, you know, we're talking about the United States here, but it's something that people just aren't really aware of. It's been off the radar. Until recently, it hasn't been an issue. And it's becoming that. And when it may be small amounts of money, but it's over millions and millions of businesses. And it adds up to lots of revenue loss for states. And that's why it becomes an issue, quite frankly. Are states basically, even though they all have different rules about what's taxed and how it's taxed, but are the rules pretty much the same in states that collect sales tax in terms of how frequently you have to pay, what types of forms you have to file?
Absolutely not.
No, we can only wish.
Due dates range from, I think the earliest date is the 15th, you know, the 20th, the 23rd, the 25th, end of the month. Depending upon your sales or your tax liability threshold, you might file annually if you're very small, up to having to make weekly remittances. So you may file the return once a month, but you may have to make remittances monthly or weekly. And those thresholds differ every single state. Every form is completely different. We do have the streamlined sales tax states that at least they have a simplified electronic return and SER that everybody is entitled to use, and in those 24 states you can file with that. However, the states reserve the right if they want to come and get more information from you in order to do documentation and reporting on the value of exemptions or things that they have in the states. But you know, that's where tools like Avalara are so helpful, because they track all that, and they build the compliance tools, they build the forms, and have the ability to actually, you know, kind of import your data from the tax collection into the compliance.
Okay. I think I'll go ahead and launch our next poll, if that makes sense here. So we've talked a little bit about how to address sales tax issues with clients, new clients, or clients who you think may have a sales tax situation. The question that's up now on Slido.com is, how do you deal with sales tax questions? And it's multiple choice questions. So go to Slido.com if you like and join in the poll. These, by the way, are not polling questions for CPE. This is not that kind of a thing. We give the numbers for CPE credit. So these are just polling questions just to survey our audience and see what kind of answers we're getting from the crowd that's out there. So, Ray, you brought up the topic of global issues. Do you want to elaborate on that a little bit more?
Yeah, and Diane can go further into digital goods and so forth, and how the EU has made changes, and you know, other countries. But where it really seems interesting to me is, you look at larger companies. Caterpillar would be a company that had, you know, customs and duty tax issues, you know, because they're selling huge pieces of equipment all over the world. Well, now, if you're a seller and you're selling anything online into an EU country or other countries, you have customs and duty taxes that you need to be aware of, that they're going to be charged on your items. And so it used to be, if you go back 3 or 4 years ago into the EU, if I wanted to get a drill, I could go and look at that, and you could see different sellers, and it would cost 120 pounds if you bought it in Europe, or it cost 60 pounds if you bought it from a U.S. seller that didn't have customs or duty taxes. And now DHL and UPS and FedEx, they're all looking out for that, and the countries themselves are being much more aggressive. So it's really interesting to me when I look at it that the very smallest company can have complicated issues associated with it, and they need to be aware of it when they do their pricing and when they do everything. And because if the buyer rejects that order, you can get that shipment sent back to you, and you incur the costs associated with it and so forth. And you may want to talk about the digital aspects and what the changes that those countries have made.
Yeah, so what Ray has talked about is duties and customs. And when we think about shipping tangible goods, they have to go through the border if you're sending into a different country. The value-added tax, the VAT, that often applies in a business-to-consumer situation, that is usually sold tax inclusive. And again, those rates are double what the U.S. rates are, or triple even. You know, I think the highest rate I've seen is 27%, I think is the highest VAT rate, but the average is 15 to 18%. And if you're selling tax inclusive and you don't build that into your pricing, again, you're losing that. But what we're seeing as the trend, and Australia, one of my clients is dealing with this right now, so I know it the best, but there's a number of other countries, including the EU. When you're selling digital goods, so there's no border to go over, you're just downloading, so there's no way for the government and the country authorities to assess that tax. They're saying all sellers, regardless of nexus, no requirement to have presence in the country at all, you are required to be registered and remit the VAT. So my client that I'm working with right now sells digital goods. They sell online subscriptions and information services, and they needed to get registered for their U.S. entity selling into Australia to collect that tax. And that went into effect July 1 of this year. Starting next year, there is also a requirement if you're selling physical goods in. Right now, it's below a threshold amount that you don't have to, but that threshold amount goes away, I believe it's July 1 of next year. So they're taking a global territorial type of perspective. So in the U.S., we're fighting about if you're going between, you know, Texas and Oklahoma, whether or not you have to collect tax. Now, outside the U.S., it's if you're selling from the U.S. to Australia, you're going to have to collect that Australian VAT even if you're not present there. And the countries are being very aggressive about doing that.
All right. We're going to break one more time for a commercial break, and when we get back, we'll have your third CPE code, so we'll see you in a minute.
A minute and 14 seconds on this break.
Okay. So
Need to be many things and need to know a lot about a wide range of financial issues. Sales and use tax is one area your clients expect you to know. Accountants that partner with Yetter Tax are able to meet their clients' sales and use tax needs with ease. We can provide the expertise you need to assist your clients. Our 30-plus years experience provide you unmatched perspective. Yetter Tax does sales tax. That's it. So when sales tax issues get complicated for your clients, we can partner with you in any way.
As a small firm, we don't have the resources to do every expertise in-house. Yetter Tax provides an excellent solution by working as a seamless extension of our firm. This allows us to work with larger clients by proving to them that they don't need a national firm to get big firm expertise.
Let Yetter Tax help your firm provide a new level of service to your clients. Find out how partnering with Yetter Tax can help you grow your practice and build long-term client relationships. Visit us online to set up a complimentary introductory call where we'll discuss how offering practical sales tax advice to your clients can build your practice.
hi, we're back. Welcome back. And at this point, you should see the third CPE code on the bottom of your screen. Be sure to write this down if you're claiming CPE or CE credit for this session. Once again, if you need to contact us with any technical issues or any questions for our speakers today, you can reach us at info@insuringsuccess.com. So feel free to use that address to check in with us. We have the poll results here from the last poll we asked, which was, how do you deal with sales tax questions? And a third of our respondents said they have a specialist in-house. So that's pretty cool. And then the rest of the answers were pretty close to the same. We either partner with a sales tax specialist, we don't answer these questions, or we need someone to partner with. And that was a little higher than the others. So do you want to talk about that a little bit, Diane?
Sure. So one of the things that we've done, I've had my firm for 21 years, and the very first marketing initiative we did was reaching out to small and mid-sized CPA firms to offer them our service, because we know that a lot of accountants maybe know and may be comfortable with the sales tax for their state, but aren't really comfortable when we're talking about cross-border or maybe even some specialized industries. And so we partner with a lot of different accountants to help them service their clients, to help them be able to retain, and we've heard this from some of the accountants we partner with, that as their clients have grown and have needed more sophisticated sales tax expertise, they were at risk of losing that client. And by partnering with us, they could still meet the client's needs for general accounting services, bookkeeping services, their income tax services. But when it came to sales tax, they just really needed somebody to help. And that's what we do. And we provide that through consulting services. We are sometimes hired directly by the accountant, and they decide what to do with our bill. In some cases, they refer us to their client, and we bill the client. But we always defer to the accountant for what role they want us to play. So if they want to be involved and help, then we do that. We've also gone in and done training through the Sales Tax Institute. One of the firms that we partner with, they had us come in and do training for their entire staff to get them up to speed so that they could handle some of the more intermediate level, but then they still, when something is a lot more complicated or a lot higher dollar amount, so a much bigger risk, they'll bring us in to do that.
Excellent.
And, you know, Avalara does a lot of webinars and different sorts of training programs, and that is something that is a great benefit to the sales tax community. We do our webinars through Sales Tax Institute. We have some training that we do both live and in person. Avalara is doing how many a month? How many webinars are you guys putting on a month?
We probably do 50 webinars a month.
You know.
Yeah, across different product sets and different tax types. You know, if you include excise and so forth, not just sales tax. But to Diane's point, even we wouldn't say we're tax experts at all. We're a technology company, and I think the thing that's important is to validate your opinion. You know, validate it with somebody who deals with it all the time, because the rules do change, and it's an ever-moving environment, like we know all taxes. Yeah. Were there some questions?
I do. I have, let's see. I have a question on Spotify. Somebody wants to know if Spotify collects sales tax for its...
So there's a difference here between collects and calculates.
Right.
Okay.
And that's the important thing. They may calculate sales tax. They likely don't collect it on your behalf. And the example that I would use is that, like on Apple, they collect tax for apps and that kind of stuff. If you buy an app on Apple, and they would remit it, Apple would remit it to the state. And that's the recent law in Washington, isn't that right? Doesn't it?
Well, the difference is who is the seller. So Apple, on their apps,
Yes.
Apple is the seller. And then they buy for resale from the various different app developers. On something like Amazon or eBay or Etsy or any of those other platforms, they can be the seller themselves. So Amazon can be a direct seller, in which case they are collecting tax, but it's those third-party sales when you are actually the listing, the seller of record, then that is where the trend has been not. And that's what the new Washington law is. And we've got Pennsylvania just passed it and a couple of others that have enacted it if the direct seller, the actual seller, is not registered in the state, that then they're putting the responsibility for the collection on the platform, the marketplace provider.
Yeah, and I would just to be clear one more time, you know, calculating tax and collecting tax are two different things.
And the other thing to really watch, because this has come up recently, people have gone into those platforms or your website and have turned on calculating the tax without ever having registered, and calculating and collecting tax without being registered and therefore not having the ability to remit it is actually criminal fraud. So that Not for Avalara orange, but as I like to say, that will get you the orange jumpsuit, but not the Avalara jumpsuit.
Well, exactly, and I think that's one of the quandaries. Technology makes it very easy to turn on tax and start calculating it.
Right.
But there's the other side is remitting, and that's where you need to be really crystal clear. If you're collecting, you need to remit. To Diane's point. Or you're gonna have more stripes.
Yeah. And you have to be collecting the right tax. The other trend that we've seen out there in a couple of key states, I'm from Chicago, this is a big problem in Illinois, is class action lawsuits and ketom lawsuits. And that's where a class action attorney goes out and looks for companies that are incorrectly calculating tax, either over collecting, in which case then they file a class action lawsuit, or under collecting and they file a false claim act that says you're defrauding the state of the revenue. And that is something that is very scary and very expensive.
There was a case, and you may be familiar with this, in the state of California on fertilizer. If you use fertilizer on a garden, it's taxable. If you use it on a crop, it's not. Well, there was a class action suit in California on individuals who bought fertilizer and used it on their gardens, their home gardens, and it was millions and millions of dollars that were recovered, that the tax was calculated incorrectly. And so to Diane's point, companies need to be, large companies need to be very aware of those things, and that's why you need Diane. I mean, it can get really complex.
In our just last minute, we're about ready to wrap up here, but is marketplace fairness still on the table? Is that the best hope there is right now for federal legislation?
I think it's one of the two bills. I think it's either marketplace fairness or the Remote Transaction Parity Act, or a hybrid of those two. I think the final bill that is in essence codifying Quill, I don't know that has the best chance. I do think right now it's not moving, but I also think it'll be interesting to see if the Supreme Court takes the South Dakota case. If they don't take it, then I think federal legislation is going to be pushed much further, and I think that's why there's maybe been a little bit of a let's wait and see what the Supreme Court does.
Okay, great. Thank you both so much. This has been really informative and great. Much appreciated. Diane Yetter, Ray Bigley, Yetter Tax, the Sales Tax Institute, Avalara, and we have one more commercial spot that's coming in right at the end of this session, so stay tuned and learn just a little bit more about Avalara. And we are out. We'll see you at the top of the hour for our next session, which is a session on thoughtfulness, trust, and a proactive strategy as a path to an inclusive firm. So please come back at the top of the hour.
Both as a partner and as a customer, I think Crush has been a fantastic event. It's been a great opportunity to understand the different challenges that customers are going to have with changing regulations, with internationalization, and really just understanding, where Avalara is taking the business allows us to better prepare ourselves and our customers.
The events were purposeful. I felt like people wanted to gather information, to learn, they were open, and I think that makes it really fun.
I love it when we can get together with customers and partners, combining learning, networking, and a little bit of fun all at the same time. Now it's time to set our sights on Crush 2018. Come join me at another great Avalara event in another terrific city. I hope to see you all at Crush 2018.